Hello and welcome to Smaulgld's. In case you missed it, top gold and silver stories for the week ended August 6th, 2016. The topic this week is about how central bank policies and intervention are driving stocks to all-time highs. The Dow Jones, S&P, and Nasdaq all hit all-time highs on Friday, despite the fact that the U.S. economy is sluggish, there's global economic uncertainty, earnings are in decline, and yet stocks continue to march higher. Why is this? Global central bank intervention, massive QE by the Bank of England, massive QE by the Bank of Japan, the United States U.S. Federal Reserve still keeping interest rates at next to zero, the ECB massive quantitative easing, buying bonds, and a highlight of this week, the Swiss National Bank buying $63 billion of U.S. equities, including $1 billion worth of gold and silver mining shares. We'll get to that in a minute. Gold and silver closed the week lower, down 1.1% at $13.35 an ounce, and silver also closed lower, down 3.1% at $19.66. The silver decline was greater than the gold decline, so the gold and silver ratio edged up to 67.92. Gold and silver were up most of the week. They declined on the so-called solid jobs growth that came with the non-farm payroll on Friday. We'll get to that as well. Charts of the week, as we mentioned. I did some research. I looked at the SEC filings after hearing that the Swiss National Bank had purchased or had a portfolio of $63 billion worth of equities. I pulled the filings from the SEC and I found that they indeed have 30 separate equity shareholdings in gold and silver mining company. You can see it on your screen. It's also at the Smaulgld website. They hold Newmont Mining, Gold Corp, Pan American Silver, First Majestic Silver. They own about 30 of these gold and silver mining companies. It's about 1.5% of their portfolio, which is bigger than most asset managers would allot to gold and silver mining companies. They have $1 billion worth of them. And that's one of the reasons that gold and silver mining companies are going higher. There has been significant institutional buying by a national bank, the Swiss National Bank. And it's also a reason why U.S. equities are going higher because of central bank intervention. Now, gold and silver mining companies have been depressed for a while, and indeed they're due for a rebound, but they certainly got a boost from $1 billion worth of new capital coming into the sector from the Swiss National Bank. As I mentioned earlier, despite the massive gains in gold this year and the poor economic environment and the poor earnings in the Dow Jones and gold are neck and neck this year. They have the same performance. They're both up about 25% this year. Even though, as you can see, the Dow Jones has had a few big dips. There's the Brexit dip right there. There's the beginning of the year dip. Gold has kind of marched steadily higher, but the Dow Jones has kept pace, and it is about the same spot as gold right now, even though you would think that the economic situation would heavily favor gold over stocks, except it doesn't because of negative interest rates and, as we mentioned, intervention. Another big trend this year in gold, higher gold prices have Westerners chasing gold. They're chasing paper gold, COMEX contracts, gold ETFs. As you can see, the demand for gold ETFs is up. But Asian demand is down significantly. They're smarter. Physical demand is down significantly in China, in India, and even down significantly with Western coin purchases out of the Perth Mint, out of the US Mint, as we'll see in a minute. Physical gold demand is down as the price rises. People who actually purchase physical gold are price sensitive. They're laying off their purchases. But the cowboys, the stock jockeys chasing gold higher, they're pouring into gold ETF and into the COMEX contracts. We mentioned Shanghai Gold Exchange. With the withdrawals on the Shanghai Gold Exchange in July were down 60% over last year, from 285 tons in July in 2015 to only 118 tons in 2016. That is the lowest amount since 2012. Year to date, Shanghai gold exchange withdrawals, which many believe are a proxy for gold demand in China, physical gold demand in China, are down 25% year to date through July. There's also reports of lower gold jewelry demand in China and also in India. Indian gold imports are down 40-50% from last year, mostly because of import duties and a jewelry tax that's been added. However, Indians are also price sensitive and they have curbed their purchases of gold as the price has risen. Okay, here are the stories that we followed. We're not going to go through all of them this week, as we normally don't. You can check out the smaulgld.com website and you can check out all the links. There's plenty of information gathered here for you. I just don't have time to go through it all. You wouldn't listen to it. So you can take a few minutes to go to the website, subscribe, take a look at the blog posts, and spend the amount of time you wish to spend on this blog post, checking out the links that you wish to check out, rather than have me guide you through each and every one of them. We had a story earlier in the week. Some of you may remember there was a Swedish gold and silver company that was shut down by the Swedish authorities I think it was last month. They took their bank account and they closed it down. And another company out of Estonia was also shut down by Swedish tax authorities. I'm not going to go through the details. You can click on that. It just highlights that Sweden is the head of the war, on the war on cash, and coin dealers are, in a sense, their enemy because they deal in real money, selling gold and silver coins that cannot be tracked in the cashless society. So they're in the crosshairs with the Swedish authorities, and there's a story there. You can check it out. As I mentioned, the silver sales, American Silver Eagle sales plummeted 75% in July. Now, there were some mitigating factors why silver sales were down in July, and I point that out in the video here. You can check that out. However, it's because the mitigating factor wasn't necessarily because retail sales were down 75%, but because retail sales to authorized purchasers early in the year were so robust that dealers were sitting on a lot of inventory and that they did not need to buy more in July. And as you can see, July silver sales at the U.S. Mint are the lowest since, you got to go back to 2008, and barely. So they were only 1.37 million in July. We had the same issue over with gold. Gold sales at the U.S. Mint in July were at one of their lowest levels. Only 30,000 American Gold Eagle 1-ounce coins were sold. Now, you would think with all of last year at this time, they sold 144,000. With all of the attention on gold going higher, that people would be pouring into, or at least retail would be pouring into gold. They're not. Only 30,000 gold coins, American Gold Eagles, were sold in July. Now, they don't even have the mitigating factor like you have with the American Silver Eagles. There's no evidence that dealers stocked up on gold coins at the earlier part of the year, because gold sales in the earlier part of the year were good, but they weren't dramatic off the charts, which would evidence some type of stockpiling in anticipation of demand. They were okay. They're on pace to do about 800,000, which is a good year. It's not a tremendous year. The record year is about 1.5 million. So the fact that they only sold 30,000 in July means that there's really not much demand for Gold Eagle coins either. We've got the same, as we mentioned, Indian bar imports down 62% in July. So you can see there is a significant decline in physical demand, even though the price is rising and people are pouring into ETFs and pushing the price higher. Economic data, there's no point in going through. It was all bad, other than to note that the Reuters propaganda never ends. U.S. consumer spending increased solidly in June. It's always solid. The consumer spending exited the second quarter with strong momentum. They mention how economists are optimistic. They don't say some economists. They just say economists, as if all economists are optimistic that spending will remain solid. I get a laugh out of it, but it is kind of insidious propaganda. Bitcoin had a hack, and it fell 30%. It regained most of its losses because it doesn't change whatever the fundamentals of Bitcoin are. It doesn't change them. It just means they got stolen. But it does highlight, if you have your Bitcoin in these exchanges, they don't have the same type of security as a thing such as gold money, where there's they can hack your account in gold money, but then they have to hack the account and then direct the proceeds to a bank, and you can't do that with gold money because you have to already have pre-authorized the bank where you're going to send the money, so they won't do it. Gold money won't execute the order. Also at gold money, and I think Bullion Vault and a lot of these companies that deal in digital gold, if they hack your account, that doesn't mean they've hacked the gold in the vault. So it's a lot easier just to hack into a Bitcoin exchange, steal the Bitcoins, and now you've got them and there's no way of finding out. But in any event, Bitcoin recovered, and that's the only story there on the Bitcoin story. A lot of people made a big deal out of it. It really just highlights that Bitcoin exchanges aren't the best place to keep your money. I did get a tip that if you do put your Bitcoin in the exchanges, don't keep them available for trading. Keep them in the offline storage so they can't be stolen. However, what I found out also though is that these exchanges then also do kind of a loss sharing program. So be careful if you're going to have Bitcoin and have them in these exchanges. Now, I did also a blog post and a companion video on the kind of strange Swiss gold import-export situation with the United States. United States normally exports gold to Switzerland. The last 2 months, they've imported gold from Switzerland. Not very much, 600,000 ounces in June, and a little less than that the month before. But that drove the hype machine into overdrive, talking about World War III coming. People, the Swiss sending the gold back to the United States for safekeeping. They need it to the ounce because COMEX doesn't have the amount of gold. Okay, even if COMEX didn't have the amount of gold that was needed to satisfy all those standing for delivery, well, if you look at the chart here, the United States sends gold to Switzerland. Means they have it, so to speak. I don't know why they send it there. They could send it there for exports. They can send it there for recasting. I mean, sometimes maybe they send it, Switzerland refines it, sends it back to them as they need it. I didn't find that story was that compelling. But in any event, you can check that story out, just the other side of the story. It's not definitive either way. It is interesting that gold imports increased from Switzerland, but I don't draw any drastic conclusions from that. It's a small amount of gold. What else? Okay, so we've already covered that. Perth Mint sales. Now, this is an interesting story because the Perth Mint has had massive rocketing sales of silver due to the introduction of the silver kangaroo coin when there was a shortage last year. And every month they've really, as you can see, over 1 million ounces they sold each month. But in July, they sold only 693, which was less than last year before the coin was introduced, which was introduced in September. And the Perth Mint explicitly stated on their blog site, in a blog post, that the reason they sold fewer silver and gold coins, and we'll get to the gold coins, sales are horrendous, in July, was that they found that North American and European dealers were well stocked. So, same situation with U.S. Silver Eagles. The dealers purchased a lot of inventory at the beginning of the year when the price was cheaper and when they expected there to be a shortage this year, and now they don't need to buy as much as they were buying in the past. We see the same thing in gold. Perth Mint gold sales were absolutely horrendous. I have data going back about 5 years, and I couldn't find a month lower than 16,000 ounces of gold being sold, less than 16,000 ounces of gold being sold at the Perth Mint. This is a horrendous month. And again, it's not like the prior months were so dramatically higher, as you can see here, that the dealers were stocked up. Yeah, they're stocked up, but it's not because they bought so much earlier in the year. They're stocked up because they're not selling that much. Again, I believe that's because the price is higher. Bank of India is studying why Indians spend so much on gold. It's kind of a ridiculous study that they're doing, but they don't understand 5,000 years of history with Indians. Then a study is probably not going to make them understand what's really going on. We mentioned July sales at the U.S. Mint. Well, August sales are even worse. After the first week, they made one report, the U.S. Mint. They only sold 75,000 American Silver Eagles in the first week, which means at this pace, they might sell 300,000. That's a far cry from selling 4 million a month on average for the first 6-7 months of the year. 5,000 American Gold Eagles, which means at that pace, they'll sell only 20,000 ounces, 1 ounce American Gold Eagle coins. So that record that they had last year at 47 million is probably way out of reach now. The year to date after the first week of August is only 20. It's not only, it's a good number, 27,695,000. And Gold Eagle sold so far 441,000. Not bad. They're not going to hit a million this year. They won't even hit 900,000 unless we get a surge of buying later in the year, which probably will only come if there's some kind of economic disaster, like a collapse in the stock market, which I don't see happening if the central bank can just keep buying more shares or lowering interest rates, or the price plummets. If the price plummets, you will see people. It seems that that was the case. The last 3 or 4 years, we saw record demand both in Asia and also out of the Western mints because the price was low. The price goes higher, people stop buying. The platinum coin, I think it looks like they've capped it at 19,000. The gold buffalo coins, they didn't sell any this last week. And the Harper's Ferry looks like it's the American the Beautiful coin looks like it's capped at 34,200, and it looks like they're waiting on the end of the month for the Teddy Roosevelt coin to come out, and they expect that one. They've allocated 150,000 to be sold. I'm not sure they'll sell 150,000. I was on AppMex and I was checking out how many were sold, and it looked like in a few days they sold about 1,000. Now, if they were really selling out those coins in anticipation that it was some kind of a big seller, they probably would have sold out of their allocation right away, but they didn't. So again, higher prices is curbing physical gold and silver demand. There's a story here, was this one from Reuters. You can't always trust what they say, Reuters India. But higher prices curb demand for gold, but festive season may spur fresh buying. We'll see. That was India. We'll see what happens there. More on the propaganda. As we mentioned, the payroll was up. It was up significantly. I had predicted this on Twitter. I said the Fed needed another strong payroll, which they can easily manufacture at the BLS, because it keeps the rate hike talk alive. Not that many people, even mainstream people, pay much attention to what the Fed says anymore about rate hikes, but it does keep that concept lingering that rate hikes are on the table because the job market is solid, robust, and so on. Had there been a poor job number this month, they would have said the last month was an outlier. And then if you look at all the rest of the economic data, it's all poor. So there'd be no way the Fed, with a straight face, and I don't even think they can say now, can be saying they're going to raise rates, especially when all the other central banks are going in the opposite direction, not only with rates, but on stimulus. And there you see it, S&P at fresh all-time high. Top cheerleader, CNBC takes note. There you have it. That's the week. Please subscribe to Smaulgld.com. That's where most of the information is, not on the YouTube channel, but also subscribe to the YouTube channel. And thanks again for listening.